everyone. I am so thankful for you to be joining us with our webinar. We have Sarah Page, who is an amazing contributor to the surrogacy field when it comes to all things insurance, financial and insurance solutions. We will be going over a couple very common questions that I get from surrogates or intended parents. I know you've been in this field for a very long time, and and so I would love for you to be able to kind of just introduce yourself, and then we'll go into what we are covering.
Happy to do so. I'm also super excited to be here because this is probably one of my favorite things to do are webinars and anything that helps educate out to anyone, either professionally or gestational carriers or intended parents or just consumers in general. So my background, I've been, oh goodness, in this community for almost 15 years. January will be 15 years, which is absolutely crazy to me. Before that, I was a fifth grade teacher, so I didn't anticipate going into insurance at all. I knew I liked business, and so I was like, well, let's try my hand at it and see how it goes. And then ended up being here for a very long time. I don't see myself doing anything different. I definitely see myself probably filtering more into the advocacy realm, which I've started to do. And I like kind of my brain is a puzzle brain. So I'm always looking at how to make things easier or solve something or, oh my gosh, I'm super operations. So how to make things, streamlined and what to do. And so that's kind of actually where this all started was I was like, I feel like we need to do more education, hence my education background and used to teaching. I started teaching dance when I was like 15, and then I did get my degree and became an actual teacher. And that's like a little bit, it's like roundabout about me, but that's kind of a little bit about me. I really enjoy doing this. And I think that it's super important. And I love, Ashley, that you all at SurrogateFirst are doing this and putting these on to help, again, educate more people and get good words out there.
I love that. We have quite a few things that's similar. So my degree is in education, elementary education, and I am a total problem solver. I tell people I love teaching, but the bureaucracy of classroom setting was not my thing.
That was it.
Now I get paid to teach parents and surrogates about surrogacy, something I'm passionate about too. So yeah, I love that we have that similar. I think a lot of people in the surrogacy field have a human service heart, right? Because it is the best of times and it is the hardest of times. And if we don't love it, it is so hard to make it through those times. Yeah. One of the things though that you guys do, because a lot of times when I meet with parents, I'm hearing things like, well, what is the worst case scenario, right? Because they are responsible for all cost reimbursements, because, catastrophic things that occur, and so it's hard to budget for a surrogacy. And a lot of parents, this is very expensive. And so to even think about hundreds of thousands of dollars additional not being budgeted for. And so you guys have this niche in this field where you're that protection. You have those items that can really protect people. And on the surrogate side too, it's important for her to understand and be able to advocate for what she needs to protect her during this journey. And if she truly knows what her family needs when she goes on bed rest, or if there was to have a loss of an organ or life, and while these things are very rare, they are important to have set up, right? Because, what's the worst case scenario? You buy the products and don't need them. Well, I don't think that's too bad compared to what the other side looks like. So, for all of those out there, I do not work for ArtRisk. I just like insurance. I actually held a license for insurance and I believe in it. So, but yeah, no, I'm not some hidden person over here. I just believe in what
advocate for good insurance, Ashley.
Let me get our slides up and I'll share kind of what we're going over today. Okay, let's see. They put me out in the pasture. So it's been it's been a minute. I don't do all the webinars anymore. I love them, but I'm oh man, I'm back to the basics. So we're navigating insurance. A couple things about myself. I'm Ashley, a 4-time surrogate. I'm also a director over at SurrogateFirst, and and love our company. A couple things that are benefits to parents and surrogates. So the first, for surrogates, we believe in you being educated and building your own compensation package to what you need for your family. We have a health and wellness program that starts when you sign with our agency and goes all the way through postpartum to help you with mental health support, wellness, hormone balancing, all of those items. We also have experienced GC coordinators and case managers. We have supportive community. So we really try to do that. Now, we are a little tongue in cheek. So if you've never come to our webinars or don't know much about Surrogate First, we are Surrogate First because we literally find the surrogate first before there is any type of invoice, or we have what's called a no match, no fee policy. So you'll need to have you and your partner approve a surrogate's profile. She approves your profile. She heads to the clinic, or her records head to the clinic. Those get approved and we do a match meeting. That's when we consider a successful match. We also do, on the other end, put the surrogate first, because we believe if we can educate, protect, and properly screen, that your child will have the safest environment, and that surrogate will be made whole throughout this entire process with us, as she offers one of the most amazing gifts. We do have ethical values, 24/7 support, experienced staff that are either GCs or IPs, and we pre-qualify our surrogates. So we do have medical records, background checks, drug panels, home evaluations, psychological evaluations. We try to stay ethical. I believe ArtRisk is part of SEEDS Ethics, which is the ethics organization for surrogacy and egg donation. And we firmly try to keep that for our agency, as following those standards and trying to be one of the most ethical agencies out there. And there is a lot of us out there. So if you're looking for an agency, we'd love to work with you. If you choose not to work with us, please go to the SEEDS website and check who is registered as a member. And then we've already got to speak with Sarah about hers. Oh, you are his chief operating officer. I was telling Jeff the other day, I don't know if director quite is my title. I'm like, I want some letters. That would be great. So
I always laugh because I am not a title person at all. And I kept changing my title over and over, and Virginia Hart, who's the owner of the company, is like, what are you doing? And I'm like, I don't know. I'm just trying to find something that like fits and that actually like says what I do. And I don't really know what it is. And so finally she's like, can you pick one? And I was like, okay.
That's me too. They're like, what do you do at the agency? And I explain, and they're like, I'm not sure if like directors, like, right. I'm like, well, we'll see. We'll just keep throwing numbers and letters out there.
Yeah. Yeah.
Awesome.
I think she finally chose that one because she's like, I needed to have one title and move on.
I think it's perfect. Like in my head, I see not just one department for you with that, like.
Yeah, no, it's the whole company.
So I'd love to ask you a couple questions if you're okay with that.
Yeah.
Okay, perfect.
Yeah, absolutely.
Got my little handy dandy notebook. And so first things was, I wanted to talk about kind of the claims process, right? So you have tons of products. One of the most common ones that surrogates and intended parents get is your accidental life insurance, with a lost organ rider, permanent disability, things like that. And you can correct me if I'm wrong, but I feel like the lost organ rider probably is the one that gets, that you would have to process that claim more often than obviously the accidental death or the permanent disability.
Yes.
What is that process like, and how hard is it? Say a surrogate goes into the surrogacy and all of a sudden she needs to file a claim on this, or the parents need to file a claim on this. Is it really hard to go through that process?
No, luckily it's not. One of the things that I love is that the accidental death insurance and the loss of reproductive organ insurance is through Lloyd's of London, which is an insurance market specifically in London, which is why it's called Lloyd's of London. I know, shocking. And essentially what I love about the Lloyd's market is that all of our surrogacy products to them are called their feel goods. They deal with a lot of insurances that are just regular insurance. Like if you're covering, they covered Wimbledon events and things of that nature. They cover aeronautics. So to them, this is family building, and they love this. And it's so fun to go there and visit them because this is very much their like feel good. So they actually are very, very easy to work with in a claims perspective because they really understand that this is a very vulnerable position for everyone to be in. And especially if we're paying out on a loss of a reproductive organ, right? That's a game changer then for that gestational carrier. I know that, kind of industry standard is, hey, be done with your family when you choose to be a surrogate, but not everybody is, or sometimes just that emotional tie, right? That we have, I'm sorry, but that we have to our organs. And so they actually make it really easy of like, hey, submit medical records. That's kind of the first and foremost. We need to see that this was because of the surrogacy journey or a complication that happened. And then the payouts within 30 to 60 days. From there, they're going to go based on contract. So that's one of the things that when we're looking at insurances, I always ask, what's in your contract? Because the insurance company won't pay more than what you're contractually liable as an intended parent to pay. So if the reproductive organ, let's say it's a partial hysterectomy, we'll go with that, and is $5,000, that's the payout to the gestational carrier, then the insurance company is going to make that payment. They're going to make the payment to the beneficiary of it, which the beneficiary of it is going to be the gestational carrier. So again, they make this a pretty smooth process for that reason that we're dealing with a vulnerable population at the time.
Yeah, I appreciate that. And do you guys help with that, or is the surrogate kind of out on her own with her agency, or?
He's not, no. So we like working direct with the agencies. We actually prefer to not place any of the collection of records in the hands of the gestational carrier. She's dealing with a lot. A lot of times the loss of organ comes after delivery or after a miscarriage. And so we're not looking to put more stress on her or the intended parent. So we actually lean on the agency to get those medical records if they can't, or it's hard. A lot of times, we'll have the gestational carrier fill out a HIPAA, and then we can have access at that point in time, which is fine. And then we collect it, we'll process it, and then again, the payment's made. But we try and we at ArtRisk, we really try and handle that internally with the insurance company far more than we're going to put any of that burden onto either the agency, intended parent, or gestational carrier. So we do need help because we're not her. So we either need that HIPAA release or someone gathering those records for us.
And I know you mentioned, amounts.
Yeah.
So maybe you can touch and you can let me know if I'm wrong, but these products are they would be considered like a rider onto the accidental insurance. So you would purchase the accidental death insurance, which for those intended parents that are on this webinar and surrogates, you can get a policy that is for the surrogate, and then it names the parents as beneficiaries of an additional like 100,000, 150,000. But on top of that, then you have some options. What are some of those options that parents and surrogates could be able to add on?
Yeah, so it's really great. One of the things I do want to kind of mention about adding for the intended parent benefit is it does not eat into anything that the gestational carrier would get. So always we look at what the intended parent's liable for making sure the GC has. So, 250, 500,000, depending on that benefit package, going back to your benefit packages, right? And then from there, the intended parent can add on an additional amount outside of what the gestational carrier. So we're never eating into the beneficiary amount for the gestational carriers. And the outside of that, what can be added on is going to be the loss of reproductive organ rider. And again, we're going to take a look at the contract. I'm going to say that word a lot because we're always looking back at where the liability is, where the risks are based on the gestational carrier agreement or contract. And from there, we say, okay, well, a partial hysterectomy, it looks like different payouts, it's going to total 5, and a full hysterectomy is going to be 10. So then we would make sure that the insurance mirrors that. The amount that can vary. And I think the big thing to know is that we don't want to over insure. So if your contract says 510, don't purchase anything more than that because you're just over insuring, but you won't get the additional benefit because we're always going to go back based to contract. The other thing you can add is permanent and total disability. While that's not in the contract, sometimes it's just a nice thing to have for the gestational carrier in case there is something permanent. I would say the payouts that have happened have typically been heart related. So we had somebody who had cardiomyopathy, and so that was going to be a lasting condition for her. It was pregnancy induced, but it stayed beyond, so it was no longer acute. So that was something that, she had PTD, and so we paid out, which is PTD is permanent and total disability, so we paid that out. That can be added to that accidental death policy. And then the other thing that can be added to it, it's not a rider, but it's an additional policy, and you have to have a base policy for it, is disability. So actually paying out for lost wages, housekeeping, childcare, if the gestational carrier goes on medically necessary bed rest before delivery.
And that's really nice. I mean, I know for, contrary to what people believe or the media says, the average surrogate has a higher income level than the median in the US, and she has a higher education level than the median in the US. And so there are nurses and teachers and lawyers that become surrogates. And so having some kind of financial protection, if she was to have to go on bed rest, to not have to meet that salary or not pay the full 100% is huge.
Right.
And, and what I share with parents is, chances are, and you can you can disagree with me because it's probably not how you guys talk to the parents, but I'm pretty sure for it is, chances are you're going to spend a few $1,000s to get these, these insurances in, and you're probably just flushing that money down the toilet. However, if you're that like 0.1%, that 1% or whatever it is that needs it, by purchasing everything and only like one of them paying out, you're going to make your money back, and you're going to save your escrow money, because at the end of the day, we still have formula and diapers and college funds on top of the cost of surrogacy.
Yes.
So
Yeah. I love that you said that, Ashley, because we're really transparent about what the risks are, and a lot of the insurances, the risks are low. They really are, right? And the way that I look at it as, if there's an insurance where there's 100% usage, they're not going to write that policy anymore. It's just not. It's not how insurance works. There still are an insurance company that they want to make money. Sorry, there's no other way to put that.
No,
But that's the reality. I think the way that we word it in our office is, an insurance policy is right for you if you don't want to make that payout. That's when it becomes right for you as an intended parent. So again, if you have a disability policy, she's on bed rest for, let's say, 8 weeks, she's a higher income earner. I mean, that doesn't even have to be high, but let's say that she's bringing in, $5,000 to $6,000 a month. Okay, then we need to really think about that. And are you comfortable paying that out for 3 months? If you are, and you're fine with that, then that's great. If you look at that and go, that's actually going to eat into more of my budget than I would like to eat into, then maybe the insurance is right for you.
I love that. I like that thought process, because that's what a lot of people do with their health insurance, right? You pick your deductible,
absolutely,
your out-of-pocket maxes, you pick the premium. If you're a healthy person, you usually go with a low premium and like, well, I'm never gonna, pay it out. I've got bubble children and a bubble husband, and we go lowest deductible, lowest out-of-pocket, because we max out every year.
All the time, right? Yep.
And so if I was gonna be an intended parent, I'm like, my luck, no, we're maxing out. So we're just going to put everything on there.
Hard, because I get asked the question, what would you do? And I'm like, oh, you can't ask me that, because I'm Murphy's Law. Anything that's going to happen is going to happen to me. That's typically what, right? So I'm like, I'm the worst person. I'm always like, overinsure me, please. So I'm like, but I'm not you. I'm not you. I'm not your risk level. I'm not your situation. So I like being asked, but at the same time, I'm like, I'm probably not the best person to ask, because if I'm going through this, I'm going to get everything at that point.
Yeah. And I've seen, sadly, I've seen 2 cases. I've had 2 cases, one who had the stillbirth plan in place, and one who was before the stillbirth plan was in place. And the devastation, most parents can't afford to do another surrogacy journey. And if there was a loss after 20 weeks, they're not attempting, once they've healed, to do another surrogacy journey.
Sure.
There's insurance products allow families to continue on. That's a whole different section. But so what type of insurance products do you offer specifically for the surrogate, that you have? I mean, all of them, I guess, tie parents and surrogates together. So
I was gonna say every one of them. minus my donor policies. So we kind of start from the very beginning. So we look at number one, insurance wise, we're looking at the IVF complications insurance. That's something that I think actually gets overlooked a lot. It's fairly inexpensive. It's around $300, but it covers if there was an adverse reaction to medication or if she had an ectopic pregnancy. What we have found is, now again, we're going to go risk level super low, understood. But when it's used, the amounts are between 30 to 60,000 in medical bills. And the policy is $300. You know what I mean? So I'm kind of like, maybe it's just something you just toss and do, and then we move on from there. Again, we're covering adverse reaction to medication. We're covering ectopic pregnancies. We've had a perforated uterus before. We've had infection occur. So like just a variety of things that possibly could happen. Of course, we place maternity insurance. That's kind of the big thing that we're known for, is vetting insurance. Is it going to work? And then placing maternity if it's not. We have a variety of ways that we work our maternity insurance, because again, we're looking at the journey, nothing in our office is cookie cutter. Everything we're looking at is very, I know, crazy. But it's journey specific that we're looking at, trying to make sure we've got, humans on the other end of this. So it's a little different. We do the life insurance, which we talked about. We have the loss of reproductive organs. We have disability insurance. We have, this isn't gestational carrier related, but we have the newborn part of it. We're really just kind of looking at it from a whole. I love that you mentioned the stillborn policy. That's kind of, again, kind of from the very beginning through the end, that's what we're looking at. And then we have, outside of insurances, then we have services to help support the journey. So we have claims management services and premium bill monitoring that will help keep the surrogate in a good space, because we find that, I know everyone's going to be shocked about this, but insurance carriers don't always follow their own rules. And you need an advocate. And so a lot of our services that aren't even policies are for actually advocating on your behalf, whether it's with the claim or whether it's actually with the insurance company or the premium payments, making sure they're paid on time. If there's a problem, going to bat for you, monitoring the claims, make sure all claims are processed appropriately and paid out according to policy terms. So we do a lot on that realm. Like that is easily, just our services and advocacy part is easily, I would say, close to half of our business of us actually working on behalf of a client and not just placing policies. While I love placing policies, truly at the heart of who we are, it's always been to make sure that the companies are doing what they're supposed to be doing.
Yeah.
Which they always don't.
It's hard. I personally, I'm, again, like I said, me personally, I'm a little on that crazy line of like, we got to do this. And so in my own surrogacy journey, I actually would look at the EOBs and the bills, because I'm like, you're not getting one over on me, insurance company. And I found where we had to get a refund for one of the deductibles, because both me with a $500 deductible. And I was like, you're not doing that to my parents.
Yep.
But unless you live and work and breathe in this field, you're not going to catch these items of making sure things are coded right. And you shouldn't have to. Like, let's be honest. Like,
I agree.
Going somebody else's human, and parents, you are going through this waiting for your baby, and all these things. Like, nobody got time to like check the EOBs. So I love that. When I shared it with my agency, because we're looking to incorporate this for all cases, and like our case managers were like, woo, like they were like, this is going to make it so much easier for the surrogate and the parent.
Oh my gosh. Yes.
Yeah. So we are excited about that on a selfish level. We're like, it's going to make it streamline things.
And it's so funny because as much as you love it, we love it, because here's why. So when a problem comes up, if it comes up in arrears and we're not ahead of it, it takes our office 2 to 3 years to correct the issue. That means reprocessing all claims, getting them paid out, getting people paid back if they overpaid for anything, right? Like, it is a process. When we can get it in the very beginning and start at the confirmation of pregnancy, we are done 8 months post-birth. Like, it is a night and day difference in timing of if we have a case that kind of blows up a little bit later on, or if we can manage it from the very beginning. So I'm always a proponent of like, hey, let's try and manage this as quickly as we possibly can, then letting it blow up. Now, I mean, we can manage it at the first sign of something, but sometimes not everyone, again, like you said, not everyone's staring at their EOBs and taking a look at them and making sure, and did it go to another insurance company that shouldn't be there, or that denied surrogacy and they're paying now? Like, there's so many different caveats of what can happen. So I'm like you, I'm always excited when people want to do this, because I'm like, oh, good. We're not going to be dealing with the, eventual problem for years, where we can head things off.
Oh, I battled with insurances again because I'm stubborn. And I battled for a case where I put in, I want to say it was like 3 or 4 like complaints with the insurance. Then I was like, I'm filing an appeal and I'm going to now reach out to the health department, like the insurance department. And then they were like, we'll pay it. And I was like, that was me, like one person for 12 months on this case, like calling every 30 days. And I'm
telling you, yes.
I have nightmares about it.
Yes. Like, yes. Somebody, in a webinar we just had, somebody mentioned that they called the insurance company 87 times. And I was like, yeah. But also, you don't need to do that.
Yeah. And no, like parent surrogates, nobody, that's not, no, we would
don't spend your time like that. Yeah.
Now you had mentioned some kind of like bed rest and childcare. Is that like a short-term disability plan, or do you guys offer what employers offer of those like short-term disabilities?
It's similar, it's not the same. So if I always tell everybody, if the employer policy is available, do that, because it's going to be better coverage, it's going to be longer coverage. We can't, honestly, I can't touch it. So I'm always like, if you've got an employer policy or a state policy, I'm going to tell you, go ahead and use that. This policy is wonderful if those aren't available. So this is going to cover, it's 80% of the net lost wages, which ends up being about 56% of gross. Okay. A normal disability policy is anywhere from 60 to 66%. So it's a little bit less than a normal disability policy. That means the intended parent's going to pay that balance of it, but it's still something that's covered. And it can start as early as, I think it's 12 weeks is the earliest that it can start, and then it can go through the end of pregnancy. So it's important to get it, I mean, kind of early on if you can. It does not cover after birth. That's something super important and a little bit different than your standard short-term disability. So it's going to stop at the birth, essentially. But it does, what I like about it is it also adds in for housekeeping and childcare. So those are in a contract. So if a gestational carrier goes out on bed rest and she normally does not have childcare for her kids, then that's an added expense for her if she cannot, lift kids or help out or go pick them up. So it's actually going to cover those childcare expenses. Same with housekeeping. If she's no longer allowed to keep house, because again, on bed rest, then it'll cover the housekeeping cost as well. So I like it. I think it's specific. And again, if we have other options, then we may say, hey, these are actually better for you, and use that.
That's awesome. And now we've mentioned accidental death, but there's also what people know of as term life. So do you guys carry both types?
We do. Yeah, we carry both types. We were talking in the office the other day. We like, it's kind of the same that I feel about disability. We like term life. It's not that I don't like it, but I do think it's more specific for specific cases. Term life is great when you have a gestational carrier that maybe wants to continue the insurance after the journey's done, because it's a 10-year term policy. So it's something that they can hold on to that premium payment and take over those payments after the journey's over. I think that's a nice option for a gestational carrier. Not everybody wants to do that. It can take longer to put into place, so that can be sometimes frustrating. The gestational carrier has to pay, not an option for her not to pay. And we find that if the journey is cut short for any reason and there's a reimbursement of premiums, that does go back to the gestational carrier. And so that's not always favorable. Term life the one there again, there's a couple positives. Another positive about the term life is that it covers, I think the coverage is broader. Not I think it is. The coverage is broader. And what I mean by that is that it covers infectious disease, COVID-19, kind of the random diseases that may happen. Whereas on the Lloyd's market, there's two insurance policies, and one of them doesn't cover anything regarding infectious disease. And then you can put a rider on it to cover COVID-19. So you can add COVID-19 in there. And the other one does cover infectious disease, but again, you have to get a rider for COVID-19. So term life would just cover that. You wouldn't have to pay any additional amount. The other difference too is that term life can be a little less expensive, but we're not talking about hundreds of dollars here. We're talking, over the course of a year, maybe a couple dollars a month, maybe $10 a month difference. So we're not talking a lot, but term life, yeah, can be a little less expensive.
I'm sorry. I have my grandmother's dog. She left him to me when she went to go be with my grandpa. And he's like, she's 25. And so she comes over and she doesn't understand manners.
Oh my
I
gosh.
apologize. Whining over here. Like, why do you not care about me?
Okay, my dog's in the other room barking up a storm. So it's,
like, I'm like, I thought I was done raising children. My youngest is 19 with this dog. Can you believe that? My last surrogate baby was born last April, not this past one, but last April. I had babies for 20 years.
My gosh, Ashley, that's amazing. It's amazing.
I also did start early back in Hawaii. We didn't have cable TV. No, this is what we did. No. Now, so we talked about the life and the accidental, and we talked about the riders.
Yeah.
The one big thing, because we are in open enrollment.
Right? Enrollment. Yeah.
And so we notice that a lot of times when we're reviewing these, the insurance reviews that you guys do, if it's an employer plan, right, or if it's not, if it's a self-funded plan, that that you do recommend like a secondary policy for it. And you've shared that with me, but that is a question we get a lot with parents. Parents all of a sudden they panic. They go, so this is not friendly. We're like, no.
Yeah.
Maybe you could explain to the surrogate and the parent just a little, like, a little review of why that is and that can help, so that they can understand, like, it's not that her plan is not surrogate friendly. It's just you need backup. Yeah.
So we're a couple things in our office. We're conservative. So we're always going to make sure that unless it's 100% yes, we're always going to give an option to further protect. That's just kind of standard in our office. So I think sometimes knowing that is helpful for intended parents, because we're not saying it's not going to cover. We're just saying, hey, we don't have 100% here. And I think the big thing to know about that is that legitimately, the only insurance that's 100% is Lloyd's of London. There's not a policy on the ACA market or an employer policy that will ever give you 100%, because it is not written specifically for surrogacy. They just don't exclude it, right? So I can never tell an intended parent, nor would I want to ever tell an intended parent, because I think that would be probably not the right thing to do, would be to say, you're fine, don't worry about it. Right. That's not the case. Even if I'm 99.98% sure, I can't tell an intended parent, you're fine, don't worry about it. That's not in my nature to do that. So the secondary policy, what it is that it's a what if policy. It's a we didn't expect policy, right? It's one of those that you get in the case that something happens that was unforeseen. I look at it as almost like car insurance. No one's anticipating getting in an accident, right? We're not anticipating going 90 miles an hour and getting tickets up the wazoo, right? That's not what happens, but we do have it in case something does happen unforeseen, right? Homeowners insurance, same thing. I'm not anticipating my home having issues, but I want to make sure it's protected regardless. So it's kind of the same thing with a secondary. There's not an anticipation that something wrong is going to happen. We're just saying, hey, let's look at an insurance that if something does, you are financially protected. Because like you said, which I love this, it's something that another agency said, and I was like, that is such a good way to look at it. You're going to pay so much to have the baby, but you still need to have finances to then raise the baby, right?
Yeah.
And so we want to make sure that we're not blowing through all those finances if something unforeseen happens. And that's where that secondary comes into play.
I appreciate that. Because it's, it's confusing. And then also like special enrollment. And, I've always wondered if I'm here at this job and next week they say, you're out, Ashley. Does that, well, not here, let's picture it in July, right? When there's no open enrollment. Does that allow me special enrollment? And what happens?
Yes. So that's always one of our really good questions. And when we're talking about, I'm going to go back to secondary and then we're going to talk about special enrollment. When we're talking about secondary, I'm not actually usually talking about a job loss. I'm talking about if a company goes bankrupt and no longer exists, which has happened, a big company, right? Or your company decides to switch insurances.
Yeah.
Because that's happened. Yes, absolutely. Or your company decides no longer to offer insurance, which has happened before in companies, right? Or you have a self-funded plan and language changes. Policy doesn't change, but your language changes, right? There are things that have happened that are not necessarily a loss of a job, because to me, a loss of a job is actually pretty easy to navigate through. So like you said, which I love that you said this, is special enrollment. When you lose a job and therefore potentially lose insurance, you're going to become it's going to be a qualifying life event, a QLE, and you are then going to be eligible for a special enrollment for an ACA plan. And there's two ways we can work it. We can look at COBRA, and if the policy is still great through COBRA and it's not cost prohibitive, we enroll you in that. That keeps your deductible, it keeps the same plan. It's a good option, right? And then the other one is if it doesn't, or we're looking at it saying, ooh, that's pretty cost, like my insurance was super inexpensive, but now COBRA is crazy expensive, I don't want to do that. Then we can look at ACA, and we have 60 days from the date that you lost your insurance to apply and get new coverage. We always have little things we're looking at. We're looking at, will you still have access to the same doctors and hospital, right? And what is the cost for that? And when can we get you enrolled on it? And right, there's like little tiny things that I call them tiny, they're not, but pieces of the puzzle that we want to make sure fit as well. But truly, loss of a job, usually we can work through that without having to even lay into the secondary policy. It's the other crazy stuff that happens, like when a company goes bankrupt, because when they go bankrupt, that insurance no longer exists. And what I always like to tell people is regarding COBRA, which is insurance that stays, it's actually it's an act, it's a federal act that allows for you to access insurance once you've been laid off or let go. The thing with COBRA, though, is the policy has to be in place. So if that policy goes away or changes, you are shifting and changing with the company. So if a company goes bankrupt or no longer offers, then you will no longer have insurance. And those are the types of things that, like, why we would suggest a secondary plan. We're talking about unforeseen, right? But it does happen.
Or I got a good one. I'm in California. I've got Surrogate-Friendly Insurance. I get fired and I don't have a policy that is surrogate-friendly in my area. And if I don't have that secondary plan, we're SOL. I mean, now we're going to a full-blown Lloyd's of London.
Right. You are. Absolutely. Absolutely. And anytime we always look at it as like, we may not be in a different position, but at least we're not stressing about it. And what if you're in the middle of a pregnancy and there's something going on and underwriting isn't going to take you now? Like, these are things again, we're always planning and prepping. I love what you said in the very, very beginning, is that we're looking at worst case scenario. This is what this is for. And we're going to prep against worst case scenario. Now, we all know that worst case scenario doesn't happen very often. Otherwise, it wouldn't be worst case scenario. It'd be your average everyday scenario. So we know that it's not going to happen very often, but they happen. 100% they happen. And with that, like, that's why we're saying, like, you just have to be comfortable with that. And if you're not, and you're looking at that going, ooh, I don't want to take on that responsibility or have those potential financial implications, then let's talk through insurance a little bit more, for sure.
Okay. And I'm going to leave you with one last one. can employers legally hold the insurance booklet? I want to jump through phones at some of these employer plans, right? Or track down these booklets that they hide. Is it legally? Because surrogates are like, I have called HR, I have called the insurance, and no one will release a booklet. They don't know where they are. Is that legal?
No, it's not legal. So they can file a complaint with the Department of Labor. Okay. We have a link that they can go to and file it against the company. I always suggest you might want to tell the company you're filing this, because they will get slapped with fines pretty much as soon as it happens. A company, here's what I need to let you know. If there's two ways that companies can write policies. They can write them as fully insured, which means that the insurance company holds the policy, pays the claims. You're not like, there's no one else dealing with finances except for you paying a premium and insurance handling it. Then you have self-funded, which means that the employer is actually paying the claims. They may be an administrator of the policy. And so what the insurance company is doing is providing one or two things. They're providing the policy language, right? And the network. Okay. So like that part of the insurance. And the other thing they can provide also is the claims administration, meaning the processing of all the claims. Okay. So, but the actual payment of it comes from your employer. So when we're looking at policies, one of the things we're always looking at is it fully insured, which means that the insurance company is paying those claims, or is it self-insured, meaning that the employer is paying? If it's fully insured, that means that all of the books are filed with the Department of Insurance. There's not an option for them not to be filed with the Department of Insurance. That also means you can get them directly from the insurance carrier. The biggest problem that we have are our wonderful self-insured, where they own the policy booklet and the insurance company typically doesn't have it on file, or they may have a sample policy, but not the full policy, because again, the employer owns it. So they can make changes to it. They can alter it. They can create their own, do whatever they want. Okay. When that happens, they have 90 days from the start of their policy. So let's say their policy starts January 1st. They have 90 days to give you a policy booklet. If they do not give you a policy booklet within 90 days, then you can file with the Department of Labor.
Oh, we're battling now. I'm going back to all of I oversee intake.
I'll send you the document and tell you how to fill everything out, because it's like, we got really frustrated with it, because we're like, you have to, it's not an option, it's a contract, and you're prohibiting somebody from saying their contract. That's not okay, right? But they do have 90 days. Yeah. And then from that 90 days, or from the request, if it's been after 90 days, then they have 30 days to give you the booklet if it's already been issued. So no, they don't have a right to not give you a booklet, but they do have, but it can take a bit of time. So
now, and if an employer is withholding their booklets like that, there's a higher chance too that they may change things too, and they have that ability. Like I had a surrogate, we went in Surrogate-Friendly Insurance, halfway through, employer said, I'm not paying that.
And they were right to. And the craziest part about this is why it's so crazy. This is why self-funded plans are crazy. It's why we always recommend a backup on them, is that they don't have to tell you that they changed something in the policy until 30 days after the change happened. And that's when they're legally required to tell you. So they don't have to, a lot of companies have to give you 30-day notice and say, hey, we're going to be changing this. They don't. They can make the change, and they just have to notify you, their consumer, within 30 days of making that change. That's it.
You're notified by a denied claim.
Yeah, they don't. I mean, that's the thing. That's what I'm saying. File with the Department of Labor. They'll get slapped with fines. It's a federal rule. Like, it's not, people need to be held accountable, especially employers and insurance companies. So
wow, now it makes sense. Now the recommending of the secondary policy makes sense when we talk about these things of like, I just never quite wrap my head around. So, I mean, I appreciate you helping me with the insurance booklet, because that was a selfish question that I needed to ask, because surrogates and myself go nuts on it. But it really makes me understand and helps me to understand why that secondary policy and that it's happening. Because I mean, if they're going to withhold the booklet and not make it accessible as what's the difference of them? They're not going to want to lose money. The company literally is the one paying these claims.
They are, yeah. And what we've asked, because we've had the same thing actually happen where we've had somebody on the policy and they have changed their language. And what we've done is we've actually filed an appeal and a grievance to say, hey, can you cover it for the balance of this one journey since she's in the middle of her pregnancy? And then that's fine that you change the language, but can it be moving forward for everybody else? But can she finish off her pregnancy? When we've done that, the companies that actually come back and said, yes, we'll let you finish off this pregnancy, not a problem. Again, our goal, I always tell you this, my goal is to not activate a secondary policy. I don't want to activate it. I want to work with the insurance companies as much as we can and hold their feet to a fire. It's when we get into the situations where they don't want to. We've had an insurance company come back and say, you can throw me anything you want to throw me. I'm going to deny it and I can use whatever language I want to because I'm self-funded. And they're right, they can. And the action isn't a grievance. It's not an appeal. It's not the Department of Insurance. It's a lawsuit. You're not going up against a company in a lawsuit. I mean,
and which surrogate and which intended parents wants to go through a lawsuit with insurance companies? Okay, that is a good segment to our finale. I want to thank you for being here so much. But before we head out, is there an organization that is working to fight and make things right in this insurance field? I have a feeling you know something about this.
This is such a pointed question. I love it.
That, like, personally, I'm not going to go after an insurance company. I don't have the money, the attorney team, anything backing me. And we've got insurance companies. I love that we have insurance, but some of these are being taken advantage of. Some people like me as a surrogate are discriminated against. I have just a feeling, because I support this organization, maybe this can get out there for other intended parents and surrogates that are watching. Would you share a little bit about your guys' organization? You're a nonprofit,
So it's called Insurance Access and Equity Alliance, IAE Alliance. And we do exactly that. We look at the language in different states and we work internally to try and rectify it, meaning like we'll file grievances or go to appeals with the Department of Insurance. But when we hit wall after wall after wall, which has happened quite frequently in California, we are going to drop legislation. And so we have written a bill. It's called the Parent Act. We're super excited about it. And we have lobbyists. So we've been fundraising for the lobbyists, and it drops December 2nd for the 2025 legislation. And it is to remove the liens in the state of California and create a very non-discriminatory creating a non-discriminatory playing field for anyone that's going through that journey, so that somebody cannot put an exclusion in. They can't put rights to reimbursement, which are your liens. They can't give you less benefit in any capacity if you're a gestational carrier. And then we also added in pregnancy as a qualifying life event, so that if somebody becomes pregnant in the middle of the year, that creates that qualifying life event. I know, as it should be, but it's not, to be able to access insurance at that time. So we're really excited about it. California is one of our first. My beautiful board, who I love, they've all worked on legislation in other states. So we've worked on New York, we've worked on Nevada, which both pass and have great laws regarding surrogacy insurance. And then we're doing California right now. Our next stop is Oregon, and then Colorado. So we've got it lined out of how we're going to be working through the states. The way that we, in our mind, are kind of working through them is what's most imperative, what's the most impactful at this time. Right now it's California, given how many surrogacy journeys are there. Our next one's going to be Oregon, because every single policy in that state carries some form of a right to reimbursement, which is terrible. And then Colorado's next, because again, we have some of the policies that are collecting on that 50% right to reimbursement lien. So we're really trying to maneuver around it. And our goal, Resolve, which is a wonderful, wonderful organization, which is working on all the infertility bills, is working on a national level, and it's beautiful. And so we kind of sat back and said, well, they're working hard on that national level. Let's work and codify it within the states. And so that's what we're working on, is getting it codified within the states.
I love that. I appreciate you guys. I signed up to take a pie to the face for the season.
Love it.
I was like, yeah, why not? I'm sure there's people out there that would love to give me a pie to the face. So just make sure you donate to
Fundraiser.
the
Don't
organization.
cream the liens. We're super excited.
I love it. But there's ways that anyone can get involved. So if you're an intended parent and you're thinking, this last 5 minutes of this webinar doesn't pertain to you, it does. Because the chances are you are going to be matching with a surrogate who may not have surrogate-friendly insurance and may have a lien or may not have plans available because we are, we are looked at and not being allowed to get surrogacy. I mean, literally booklets will say we do not cover anyone acting as a surrogate.
Yeah.
However, you as an intended parent have an insurance policy and you won't be using that for childbirth. So tell me where that makes sense, or whatever. I could get into it because I'm one of those feisty people. So we're going to end it with that. I thank you so much before I get in trouble and they don't let me back on a webinar. Thank you so much for your time. And I appreciate talking with you. I'm so thankful for all the little golden nuggets you've kind of just shared with us, and even helped me as someone who's been in this field for 8 years to finally comprehend how that secondary policy and where these, things, it just something wasn't connecting. And so I appreciate that, because I will share that, we call it mana'o, but in Hawaii, but knowledge with our clients so that everyone can get protected and stay protected. And just, we want to get baby here, boring, safe.
Yes, we do.
And then everyone can enjoy their lives after. And so I appreciate you for helping our parents and our surrogates.
Thanks, Ashley. I really appreciate you guys too. You guys are a great agency. We love working with you. I'm so excited. I'm always excited to share any knowledge I can. So
yes,
I appreciate this.
That. No, I appreciate it too. Everyone else, if you have any questions, reach out to me. Oh, I have a slide to share. I have the most amazing person who sets up all of my stuff for the webinar. So I'm going to share that real quick. If you want to get a hold of me because you have questions, you can reach out to Ashley, ASHLEY at surrogatefirst.com. And I can be able to answer your questions. ArtRisk has an amazing page. So if you have questions, check out their website first. They've got some general emails and other products and videos and things like that that you can watch. And then we do have Sarah's information here too. I'm sure she's running around crazy fighting the world's insurance issues and then also helping her clients. But what would be the best way for them to get a hold of someone at ArtRisk if they were interested in products and learning more?
So honestly, info at yourinsuranceresource.com is perfect. That's going to go to my intake team and they're going to get you into the right hands. But if you email me, I will say thank you so much and I'll put you in the right hands. So you're welcome to do that. But yeah, it's great. And then we have intended parent webinars too. If you want even more information, you can come. They're not, again, they're all educational. So we're not looking to kind of hawk any products. We're just looking to kind of do this, right? Just talk to you about what's real and what happens and how we can help protect everybody.
Awesome. Well, I appreciate that. If you want to get a hold of me by phone, you can dial 1-833-99-BLESS. And we thank you so much. Check us out in 2 weeks when we do our next webinar. Have a great day. Bye.
Okay.